Namaste, welcome back to Smart Trade with Sangeeta. Let me ask you something. Have you ever approved a loan based on great looking financial only to find out later that the inventory, the stock was inflated or receivable were completely fake? Now, it happens more often than even you can think. Now, here's what I want you today in the comment section. Share just one red flag, not more, only one red flag that you have spotted during a field visit, site inspection. Maybe I know it was a fake stock or say related party transaction, sister concern transaction, or maybe you found out something unusual. Now, your experience will help other credit officers learn. So please pause right now, pause this video right now, go to the comment section and just share your story, and I will also be reading all the comments and responding to each one, and maybe based on your comments I can make a new video that can help other credit officers to learn from your mistakes, right? So today I'm going to give you a complete field visit checklist. Now everything you need to verify stock and receivables like a pro. This is going to be a detailed video, maybe 20 to 30 minutes, because I believe that shortcuts don't work in credit appraisal, right? If you want surface level tips, then this video is not for you. But if you want to learn deeply, protect your portfolio and avoid NPS, then please stay with me. So let's get started quickly. So before we start, I will into the this checklist. Let me tell you why this matters so much. I have seen cases where the books of the accounts shows 50 lakhs of inventory, but when we physically verified them, the actual stock was barely 15 lakhs. Completely crazy, right? Now, where did this remaining 25 lakhs go? It was diverted to other businesses. They, in fact, use the money for their personal use, or maybe it simply never existed for them. And another case, one proprietorship firm showed 30 lakhs in receivable, and it looked great because we had to give a very small loan. But when we started calling the debtors just to verify, because this loan was completely on receivable basis, so half of them said that they never received any goods, and some were related parties, his own family members like their son, maybe sometimes their wife. Now the disputed amounts would never be recovered, right? So these disasters could have been avoided, right, with proper field verification. Now your one thorough field visit, site inspection can save you from years of recovery nightmares, those accountability and NPS stress. So let's learn how to do this in the right way. I learn from you and you learn from me. Let's make it two-way communication for this video, correct? So now we will cover in today's video these four comprehensive areas. Preparation before you leave your office, right? Pre-visit verification we call it. Complete stock verification process. Now detailed receivables checking, that is your receivable verification, and the critical red flags to watch for when you are going for site inspection, right? Now by the end of this video you will have a complete professional checklist so that you can use on your next field visit. And so let's start with the preparation. Okay, first let's talk about preparation. This is my personal caution to you. Please never ever go to this field inspection site visit unprepared. The quality of your preparation, it directly determines the quality of your verification. Now before you step out of your office, just a day before, spend at least 30 minutes just reviewing their documents. Now you can start with their latest CMA report that the customer has given. What are their inventory levels they are claiming? Just note down the figures, the numbers. You will need to verify, right, these with their books of account. Now after that you can check their account statements for minimum 6 to 12 months. Now you can look for unusual patterns, like we can say large cash deposits, maybe, and most importantly frequent check bounces. Was there any overdraft overuse? These things you can check. These will give you the real clue of the financial health of the business. You can also review their GST returns of past 6 months, right? Their GSTR1 will show their sales, GSTR2A will show the purchases, and GSTR3B, this is the summary of both, right? Now these three should be consistent. There should not be any mismatch among the figures. If it is a mismatch, then this is a, trust me, a red flag. Okay, now you can also get their latest debtor list and creditor list also, with name, accounts, and how old they are, the number of days. That is the much more important, right? If there are previous audit reports, maybe stock audit reports are available with you, you can read them, what issues were found during the last visit, last audit. Now, was that issue resolved? Just check for that. Now, all these documents will guide you exactly what you need to verify on the ground, on the visit. Make detailed notes of anything. Just carry a folder, maybe a paper or notebook, right? And just write anything that looks you suspicious, that doesn't match, or maybe seems good to be true. Now, your preparation homework will make the actual visit much more effective and much more easier for you. Now, based on these documents and you reviewed, now prepare some specific question. Now, what's their actual production capacity versus what they are actually currently producing? Now, if they have capacity, say, of 1,000 units per month, but why they are producing only 300 per month, right? Now, why is their inventory so high, right? Now, if our inventory, the levels they are showing, are they realistic for their annual turnover? Let's say a company with 50 lakh of annual sales should not have 40 lakhs of sitting in inventory, right? The math, you can see, it will never work. Now, you can ask who are their major customers, their suppliers. Just get their names. You will verify these all during your visit. If they claim to supply to big companies, now you should be able to see the dispatch records, their purchase order, their payment proof. Now, a small manufacturing unit claiming that they have 2 crore inventory, don't you think it's a red flag? Yeah, right? You need to investigate more in deep. So, just prepare all these questions based on what doesn't add up in the papers. Go with the skeptical but fair mindset, right? Don't go with the mindset, no, this person is fraud or maybe this is red flag. Just go and have a discussion, check the things with the financial, with the report you prepared, right? Okay, now let's go to the main event, the day of stock verification. Now, this is where most manipulation happens. So please pay the close attention to this section. Now, every manufacturing or trading business has 3 types of inventory, and you must verify each of them separately. Please don't club them together, right? First is raw material. Now, these are the materials that are used that are waiting to be used for production. You can check these through their recent purchase bill. Now, match quantities with what you just physically see. Maybe on the random basis, you can just simply call their suppliers if you need more confirmation of the purchases. Now, second, you can see is work in progress, right? Now, this will contain items that are currently being manufactured, or I can say processed. Now, these should match with your current production schedules, correct? Or maybe their order books. Now, if they claim that the high work-in process is there, but production has been stopped, or maybe there are no orders, something seriously is wrong, right? Now, WIP is also the easiest to inflate because it's very hard you can verify them, correct? And the last one is finished goods. Now, these are the products that are completely ready for the sale. You can cross-check these with the recent dispatch records or maybe sales invoice, and also with the delivery challans. Now, if these finished goods have been sitting for, say, a month, 30 days, then they are obsolete or maybe unsellable. Always segregate and verify each category just separately. Just ask them to show you each type of inventory in different areas. This prevents you from showing the same stock twice, right? By moving it around and around, correct? Now, so here's your detailed stock verification checklist. Just I want you to take the screenshot of this page so that you can use it on your every single field visit. You can simply keep this in your office diary, or maybe on your, if you can stick it on your desk so that you can easily check it out when you need it, or maybe you can take a screenshot in your phone so that it is easily available with you when you go for a site verification, right? Now, starting with physical verification, please don't just accept what the owner or the manager or the accounts department tell you. You need to decide what to count. Now, you can just pick some random samples with from maybe their different location, their different warehouses, correct? Just check what are behind the other items, maybe top sleeves, bottom sleeves. Just count them yourself. Don't rely on the staff to just count for you and tell you the numbers. Check the condition carefully. Just check it if the stock is damaged, or maybe items if they are not looking old. In textile or maybe food business, just always check the expiry date. For machinery parts, you can check for rust or maybe deterioration, damaged or obsolete stock. These have only zero value, right? So don't count it in your assessment. Now, after you have done this, look at the storage condition. Is it with properly covered warehouse with organized rack, or is the stock just dumped in an open area exposed to to rain or sun, right? Now, poor storage means poor management, and that will damage the good that you are financing for, right? Now, here's the professional trick. Just check for dust accumulation. Just put your finger, you can check if there is any dust on the boxes or items, correct? That means the stock is either slow moving or dead stock. Just run your fingers now. Just now check for document matching. Compare what you physically counted with their stock register. The stock register should have dates, quantities, rates, everything should tally. And if the register is messy, incomplete, or maintained poorly, then you need to be suspicious. Okay, after you have done this, check actual purchase bill for the raw materials. Are these bills recent, or are they from genuine suppliers? Maybe you can verify from those suppliers, right? If they actually exist, call them. That's completely fine, right? We have called many suppliers and they don't mind, correct? Now, for finished good, you can check simple sales invoices, dispatch record. If they show 20 lakhs in finished good but there are no recent sales or dispatches, then why is their stock sitting, right? Either there is no demand, or maybe the stock is inflated on paper, correct? Now, any mismatch between physical count or maybe documents is a serious red flag. You need to watch for it. Don't ignore the small differences, right? Okay, let me share you a real case study of my experience. Just I remember a small manufacturing unit. It applied for a term loan with us. Their CMA report showed that they had 50 lakh of inventory, and it was just reasonable as per their turnover. Now, when we visited their site, their books only showed 20 lakhs of raw material. We physically went checked and found that 8 lakhs was only available, right? Now, and most of that was only old stock for poor, or maybe of poor quality, and some had been sitting for over years, and supplier confirmed that they hadn't supplied anything in the recent months. And work in progress, as per their balance sheet, their stock statement showed 15 lakhs. And when we checked the production record, there was a minimal production happening. Actual WIP was barely only 3 lakhs. And even that valuation was generous. They had grossly overvalued their work in products, and finished good they showed was 15 lakhs. But when we checked, there were only the 6 lakh of the worth was just their obsolete stock, right? Nobody wanted those products anymore. And realizable value of finished goods, when we verified, that was only 9 lakh now. So out of 50 lakhs, just 20 lakh inventory was actually present, right? Now, this was 60% inflation, correct? Now, if we had sanctioned that loan on books alone, just seeing the turnover, and the business defaulted, our security would have been almost worthless. And now this is exactly why physical verification is non-negotiable. Now, papers can lie, but physical reality will never lie. If you're watching this and you have experienced similar stock manipulation, overvaluation, maybe fake inventory or anything, please share it in the comment box. Now, real world examples will help our entire community of credit officers learn thoroughly, right? Now, let's talk about the manipulation tactics you need to watch this video for, okay? Now, now let me tell you about some common manipulation tactics I have seen over the years and learn to recognize these patterns. First is stock rotation. I have seen this same stock is rotated at multiple locations just for the verification of bank. Second is empty boxes that was completely filled with waste. Yes, you are right. You can, when you visit the site, you can see the stacks of sealed boxes nicely arranged. Now they will tell you that this is finished good, just ready to be dispatched. But when you actually just unseal the one, and you will find that this is filled of waste, sometimes sand, waste materials, and sometimes these are completely empty. Now, third tactic is old invoices showing old purchase bill as recent. I have just checked during my visit that they have just shown the old invoices, just changing the date, manipulating the date. So please be cautious of that. And number fourth is overvaluation in the stock register. This is very common. The market rate of say 100 of an item is 100 rupees, but in their stock register they have shown it 150 or sometimes 200. They just inflate the rate just to increase the total value of the stock. Please check the market rate yourself. Now, this is why I keep emphasizing that go for physical verification with document verification. Both are parallelly essential. Never rely just on one. Okay. Okay, let's talk about receivable verification. Now, this is equally critical and often manipulated because in some ways receivables are even easier to fake than inventory, right? Because they are just on paper entries. So we need to be extra careful here. So start here. Receivable verification with debtor aging analysis. That is why we most oftenly say to customers to give the debtor statement age wise, and maximum time that is CS certified, right? Now let's take an example here. Total receivables value is say 30 lakhs. So let's see the breakup by age. Okay, so 0 to 30 days, and the receivable value is 15 lakhs. That is the total 50%, right? Then we can consider it is a low risk because, right, we take stock receivable value up to 90 days, correct? Now for 31 to 60 days they have given 8 lakhs value of receivable. This is 27% risk medium, okay, right? And just for 61 to 90 days 4 lakhs of receivable. Now this is the 13% of the total one. Okay, now here you need to be concerned because payment have not come even after 60 days, and is maybe there might be, you can think of that there might be quality issue or maybe any dispute, or if the debt is facing any financial problem, correct? Now over the 90 days they have shown here is 3 lakhs receivable, that is 10% of the total receivables. Now this is a major red flag. This is a high risk because payments are pending for more than 3 months. Why? Is it even recoverable, right? Now here's what you do. Always ask for age-wise breakup, and if possible take the CS certified statement, right? Now in your assessment you should discount old receivables heavily. Just minus them. Beyond 90 days I always say just minus them, or anything over 90 days, correct? Now please don't count them as good security. The receivables from 0 to 90 days, you can take them for your drawing power calculation. Okay, now here's your complete receivable verification checklist. Let me explain each point in detail, right? Now first you can get a simple complete data list with full details. I'm not saying just names, with amounts and contact number, and if email by ID possible, that's the best because you can easily verify them. The second is just get their top 5 debtors. Don't just stress the list on paper. Just, in fact I will say, just call all of them. Maybe you can search on Google and just mail them. Maybe you can call their department to verify. If your limit is completely on the databases, then you can do this. And if it is on the stock and debtors, then you can just randomly call 2 to 3 to verify, right? Now the third point is check for the concentration risk. This is very important. What is concentration risk? It means that too much money is dependent on just few customers. Say 50% of customers receivable value is of only one customer. Now that's a huge risk, right? Now, fourth point is match with GSTR2A. Now, this is one of the most powerful tools I believe is available to you today, right? Now, let me explain how it works. When a business, say A business, is selling something to B, right? This sale will be reported in GSTR1 of A, and when this and in GSTR2 of the B, that is a purchase value, right? Now, why do business create fake invoices? Just to show their high turnover so that they can get bigger loans. They create invoices to non-existent customers. Trust me, I have seen this many times. Or sometimes to customers who are fraud. Now, this GSTR2A cross-checking catches such frauds and always verify major invoices through GSTR2A. Now, next, the fifth point is look for related party transaction. Now, related party means the data is connected to the business owner. He could be his family owner. In simple words, they can be family concern or sister concern, right? Now, in this case, you need to look specifically. Just check for the family member details because this can be a high risk, right? Maybe they are showing the fake turnover just to route the transaction for their family members, right? Now, number six, check for the disputed amount. Now, this is critical. Call major debtors and ask clearly, do you have any dispute or issues with the goods supplied by this company? Here, I check one more thing. If the limit is in renewal or say just in the mid of the month since you first sanctioned, you can just verify this list from the earlier one, 6 months before, and you will come to know whether this amount is disputed or not, right? And now, seventh is and the final point is verify the credit period offered versus the actual collection time, right? Now, this tells us that a lot about the business efficiency and its customer relationship. Now, credit period is the time given to the customer to pay, right? And is standard in wholesale trade is just 30 days. And in manufacturing to dealers, it is sometime 45 to 60 days. But what matters is, are they actually collecting within that period? Now, whatever will be the reason if they give, then that means this collection period is stressed, and that is a red flag. Check the actual day sales outstanding, not just what they claim as credit period, right? The reality matters, not the policy. These 7 points together, they can be a complete guide, complete picture of whether their receivables are genuine, realizable, or are good security or not, right? Okay, now let me share you another example. Say this is a ABC company and Amit is the owner. He claimed that his receivable is of 40 lakhs. Now, when we verified the things on verification on the site, we found out that his top debtor was 15 lakh. And who was his brother's firm owner? Now, that's a red flag, right? Related party transaction, and it also can mean not genuine business transaction. And the second largest was 10 lakh and it was disputed. And you know what customer said? They said, yes, we received good, but 30% were damaged during transit. We keep in dispute for 3 months. We are not paying the full amount until we resolve. So that clearly means that another 10 lakh is completely stuck. Right now, out of 40, you can see 25 is already non-considerable. Then 8 lakh was over 120 days old with no collection effort, means again another gone, right? 8 lakh and GSTR2A, there was a mismatch of 5 lakh. So the only realizable receivable out of 40 lakhs was just 12 lakhs. Now that's a huge number, right? Now imagine if we had sanctioned that working capital limit of 40 lakhs, and when the business couldn't pay, that clearly means this is the condition, the business would never pay. So we had to go on recovery and the security was zero for the bank, right? Now this is why thorough receivable verification is absolutely essential every time. Okay, finally let's cover the critical red flags you must watch during the field visit and how to document everything properly. Let's have a look at the top 6 red flags, and you need to learn these patterns. They will save you from the bad loans. Okay, first is inconsistent stories. You ask the owner about the production capacity, you ask the production manager, both of them give you a completely different story. You ask accountant about credit period, and she says something else. That means no one's story matches. People are hiding something. Basic facts about the business should be consistent, everyone, right? What the owner says, the same story should be said by their employees, right? Now, second red flag is lack of systems. Now, there's no organized stock register. All records are just manual. Maybe owner only knows about this, or maybe the manager only knows about this, or maybe they are keeping just rough notebook. Then trust me, this is a big red flag. And then next is the third one is reluctance to show use certain areas, right? Now you want to see the warehouse, they make excuses. Say let's take in a plain and simple language. They say we have two warehouses, but they just give you the verification of one, and for the second they say it is locked, or maybe the person is not available, and anything they just avoid to show you the second warehouse. Then you clearly need to know what they are hiding, right? And the third is mismatch with the business scale. Now small unit, right, and they have huge inventory, they claim it, then a red flag. And now fifth one is too good to be true. You see the papers and you verify the stock and you think everything is too perfect. All debtors are current, not a single overdue payment. They have never had a single bad debt in say 10 years. All inventory is perfect, nothing is damaged, nothing slow moving. Now please be very suspicious. You are a banker. When things looks good to be true, you need to check you from your third eye. And now the sixth red flag: multiple related party transaction through business. Now the say the raw material supplies owner's cousin, we can say his brother, and the biggest customer of the owner is his sister. Now they take loan from the owner's family. Now all the major transactions are happening within a small family. There is no third party. Now this clearly indicates fund hours and round tripping and moving money in circles to create an illusion of that the business activity is going on. So when you spot any of these red flags, just investigate more deeper. Please never ignore them, because often one red flag leads to discovering more bigger problem. Okay. The loan goes bad, year later, your inspection report, your field visit report will be scrutinized, right? In every bank there's accountability issue, right? So they will verify everything. So please document everything thoroughly. Take clear time-stamped photographs. I can say geotagging photographs, wide angle shots, storage areas showing their overall setup, close look of photo of the sample items, their stock, everything, right? You can take photos of their, if it is a manufacturing unit, take photos of equipment and machinery, business premises, and sometimes if possible you can take the photos of their staff, maybe not knowingly, but because that will help during the recovery process. Okay. Now, and always prepare the report, the stock verification report, how much quantity, their value. You can also, if you have mailed the debtors, prepare that data confirmation status. If you have talked to their debtors, please everything, put everything. You can also in the inspection report you can mention your observation and red flags you have observed and you can attach the sheet with recommendations, maybe sanction, rejection, reduce, anything. And attach, if you are having any supporting documents, maybe you have taken the photo of the stock register or anything, GST printout, just put everything at one place. Now here's your complete field visit checklist summarized in just one page. Okay, you can just take a screenshot. So before you leave office, just review all the financial documents, GST returns. You can prepare the questions, whatever you have to ask. And now for stock verification, just physically count, maybe condition check, match with their document, GST identifier, their obsolete and slow moving items. Then you can go for receivable verification, get their aging and receivable aging analysis, confirm from their top 5 debtors by just calling them, by doing a mail, or maybe do a GST or 2A match. Also you can check for related party transaction. And the finally is the documentation. Document everything. take clear photos, write detailed reports, and you can give the clear recommendation. Now use this checklist on every single field visit. Print it out and keep it with you. It will never make your field verification a tougher one. Okay, and it will also save you from the bad. Let me leave you with this principle that you should guide every field visit. Always trust, but please verify. It's okay to be friendly with the borrower. It's okay to believe they are running a genuine business, but never, ever accept anything at just looking at the face value of the borrower because it's written on paper or because someone told you, right? Always trust. This has been my golden rule throughout my banking. Always trust the documents, but verify them against the physical reality. Trust their words, but verify it through independent sources. Call their debtors, check GST portal with the suppliers. You can trust the inventory numbers, but always verify by physically counting or checking the conditions. Now, your thorough due diligence will protect your entire portfolio from being NPA. Now, a proper 1 to 2 hour field visit that can save you from years of recovery, headaches, legal battles, career stress. Now, I have seen credit officers whose careers were damaged because of their sanction made without proper verification, and that loan went turned NPA. At last, we found out that there was nothing in stock, and they didn't make a visit because they trusted the customer. Now, please take field visits seriously and follow this checklist I provided you systematically. Don't cut corners. Your professional reputation or your portfolio health depend all on the quality of your field verification. So before you go, just 3 requests. First, tell me in the comment section what was your biggest takeaway from my this video, or better yet, share your own field experience and any red flags you have caught anytime, or any manipulation you have discovered during your proposal, or maybe anything interesting, right? Your experience will help our entire community to learn and grow together. So second, if you found this video helpful and detailed, please hit the like button. It genuinely helps this content to reach more and more credit officers, bank manager, and SME professionals who actually need it. And the third one is, please subscribe to Smart Credit with Sangeeta and turn on the notification bell so you don't miss the next video where I will be covering more about the smart credit analysis, MSME, or financial analysis. So thank you for watching this, staying through all the entire video. I know it was long, but I also know that field visits are too important and I need to tell them in a detailed manner. Always remember this principle. Your due diligence today prevents NPS tomorrow. Keep analyzing smartly, protect your portfolio, and until then, I'll see you in the next video. Take care.